Hey everyone, Rico Rivera here with Silicon East Real Estate Powered by Guide, and we have a special guest speaker with us today. And that's Cristi. I'm going to let her introduce herself. Cristi, can you please introduce yourself for us?
Hi, my name is Cristi Rodda, and I'm with Farmers Insurance. I'm an agent. A lot of you know Steve Larson. I worked with him for 17 years as his office manager. I ran the business with him. Unfortunately, he became ill and passed away. I purchased his business August 1st last year. Kept the same wonderful staff. Love Yuri, Liz, Erica runs our commercial department. Carlicia, I added Carlicia, so I take credit for that one. And Tiana, we have back, who used to work with Steve as well. So they're a great team.
That's awesome. Well, you know what? May he rest in peace. He was a great man and a good
Wonderful.
friend, and I have nothing but respect for that man. And so what he did and what he created, and you being a part of that for that long, I think it's great that you're able to buy that business and that you're continuing that office and that legacy of that office. So congratulations to you. Let's get right into it. This is my first question for you.
Okay.
What is the difference between a home warranty and homeowners insurance?
So homeowners insurance will cover sudden and accidental losses. So if there's a fire, if there's theft, you think of the big things that hit your home, sudden accidental. We're not going to cover the wear and tear. If your roof gets old, you need to replace your roof. So if don't call your insurance company for just maintenance issues. Old toilets, keep up with your home, have pride of ownership, keep it up so nothing bad happens because your insurance won't cover it. That's something that kind of surprises people when we meet with them. We try and explain, keep up with your roof. If you see something bad, take care of it. Um, Home warranty kind of fills that gap up with some of the things. I don't think it covers the roofs, but you've got the maintenance on the refrigerators, the appliances, um, heating and air. But
Yep.
that's where you want to look at the maintenance. If you have the home warranty, that's where it covers maintenance issues or something that insurance will not cover, the wear and tear portion of it.
Very good. And here's what I'll tell you as a consumer out there. So if you have a home warranty and you have your homeowner's insurance, you are well covered. You are essentially you're the most covered you can ever be.
Yeah.
That doesn't mean that you're not going to be out of pocket, right? So with homeowners insurance, you're going to have a deductible. With your home warranty, you're going to have a deductible. And they both cover different things. And I've been in the business of the home warranty for a long time before I was in real estate. And so I know that the home warranty would cover maintenance, right, on items, systems, and appliances, and the homeowner's insurance would cover the secondary damage, for example.
Yeah.
So I really appreciate you coming on here and just clarifying that. Here's the other question I have, and especially in this market, a lot of the homes are going up in value. So should people increase their homeowners insurance, and how does that work? Like, tell us about that.
So what I advise clients, people see their homeowners going up. I mean, look at our value of our home even 3 years ago. It was lower, it's gonna go up and we love it, right? That means we're getting more equity, our value is better. But if you take my home in Atomas and put it in San Francisco, okay? You don't want my $300,000, $400,000 replacement cost to rebuild to match the ups and downs of the market. It's going to be worth $800,000 in San Francisco just because of land value. So we take out land value when you look at replacement cost. So replacement cost is how much, for me, how much Farmers says based on all the information that we get online and from you guys. We take the year built, square footage, customizations on the home. We have specific questions that we ask you to give us how much it actually costs to rebuild. Take that home, put it in San Francisco. We're still going to cover it for 400,000, even though it's worth $800,000 because it's now in San Francisco.
Mm.
So even in Sacramento, we're going to go like this, hopefully up, 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 but it's come down, and you don't want to lower it if our market value goes down too. If we're used to it being at 400,000, something happens to the market, you don't want to lower it because we still cover the actual cost to rebuild if there's a fire. That will never change. Inflation will make it go up because the cost of materials, cost of labor goes up. So slowly the replacement cost goes up over time. But you don't want us to follow market value, and we don't want to follow market value because your rates will match.
And that makes total sense to me in the sense of, you know, that the exact same house, the exact same material that you have in Sacramento is worth twice, sometimes three times as much in San Francisco.
Yeah.
You know, and
The
the land
land
is the
value.
land, and you're paying, you know, you're paying for the land in that instance. You're paying for location, 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 and that's what everybody says, right?
Yeah.
So that makes total sense to me. Here's my next question, and this will be a tough question. So, what is it true that if you place a claim, your insurance will go automatically up? How does that? Is that true? Is that something that happens? I've heard that. I know with home warranties you can place claims and you have certain limits, but it doesn't necessarily go up. Is with insurance, with homeowners insurance, does it go up if you place a claim? Period.
No, like storm damage, like we just had, storm damage won't increase the rate. It's for farmers, it's an actual loss of a claims-free discount. So if you have that discount and it's a loss, it's a good discount. It's about 25 to 35% discount. But you know, certain claims don't count. Unfortunately, theft does. We have a hard time. Clients see it as it wasn't my fault. You know, sorry, but insurance companies, you know, that's why we kind of do recommend kind of higher deductibles. You don't want to turn in the little claims. It keeps the premiums low. If you know my shower kind of leaked into my kitchen, it was close to my deductible. I have a very high deductible. It was close. I just had to suck it up and pay it. But the higher deductibles mean I'm not going to turn in the little things. I'm here for the big things. I want the fires covered. Some insurance companies actually cancel you if you have one claim or two
Oh,
claims.
wow.
So instead of having the rates go up, they can actually cancel you. Especially water claims. Water claims are big right now, like leaks. But we do have the loss of the claims-free discount. That's for 3 years only. Some people think it lasts forever, but you get it back after 3 years.
So let me ask that. So there's two things that you said that really interest me. Number one, knowing that you've been in the business for 17 years or more than 17 years, right? That you have a high deductible. As an insurance agent yourself, you decide, hey, I'd rather have a high deductible because if I have a higher deductible, I pay less per month, right?
Yep.
And then knowing that if I have a high deductible, if there's something that's kind of small, I'm just going to take care of it myself.
Yeah.
Because it makes more sense for me to get that insurance discount.
Right. And, you know, frequency of loss, it's about one claim in 9 years for fire. So you think of the money you save over those 9 years, that makes a hard day if you do have a loss. You know, if you have a high deductible, that's a hard day. But with the liability that you're getting, we recommend high liability, the big stuff. Cover the big things, accept a little bit more risk yourself so that you can have the higher coverages, the better coverages, and lower premium to be able to get that with the high deductibles. Then you don't turn into small things, just take care of it. If you can't afford it, by all means, do not have a high deductible. We'll work with the budget, you know, work with whoever you're working with on your budget. But if you can put it on your credit card one time out of 9 years, do it to save the money. It makes sense usually.
That makes sense. That's awesome. That's a great tip. I really appreciate that. My next question, probably my last question before we go into maybe some tips you can give us. Do we need flood insurance in Sacramento?
Flood insurance, we recommend it no matter where you are. Sacramento is the river city. We've got levees everywhere. Yes, they're working on it. But working on it does not mean that you are safe. I know there's X zones, there's A99 zones. So the mortgage, as to whether it's required or not, that has to do with the zoning. So we run a zone determination. That tells us whether the lender will be requiring the flood insurance or not requiring it. They usually can include that with impound. So they will pay for it. If it's not in a required zone, that does not mean that you should not have it. It just means they're not going to require it. I live in Natomas. I was not in a required flood zone for a long time. But Natomas was rice paddies before they built all these homes. So, and our levies, we're just surrounded by levies all over. So it was not required when I first bought my house in 2003. And then now it is required because they took a look at those levies and they changed the zone. Fortunately, we were able to keep the lower rate as if we were not in a required zone. And that's just Natomas. Legislators helped us with that a lot, keeping the premiums low and not skyrocketing.
That's awesome. So last thing, give us some tips as an agent that you might have for us. And then obviously, everybody knows we're going to have your information down below. People can get a hold of you if they have more questions and they need insurance. And then obviously if people have questions for me, they can get a hold of me. But some tips, give us some tips as an insurance agent.
Right now with COVID, a lot of people are working from home. Check with your auto insurance carrier. Annual miles in California is huge. That's mostly how your rates are figured right now. Keep in mind it's going to go up when things go back to normal ever. But, talk to your insurance carrier, let them help you out. We can't reach out to everyone at once. We just can't get to everyone. So I suggest, if you were commuting every day a year ago, like exactly a year ago, you're probably at 15,000 miles a year estimated. Now we're all stuck at home. We can't do much. So you can lower your miles and that will reflect your premium. Just be ready for it to
Nice.
slowly go up a little as you start driving again. Don't get mad if it goes up, but get some help right now if you need it.
I love that. That is a great tip. That's an awesome tip. Most people don't even think of that, right? It's
Yeah,
just, especially if you still are working and you have the ability to pay, you
yeah.
just don't think, hey, I need to do this. But amazing tip. Cristi, you've been awesome. I appreciate you being on the show. Thank you so much for your time. Everyone, if you guys have any questions on insurance, make sure you give her a call. Her information is down below. She works with farmers. She has an awesome practice here in town. So thank you again.
Thank you, Rico.
Have a great day.
You too. Thanks.
Bye.
Bye.